Good afternoon and welcome to the Netflix Q.
Okay.
Saying Netflix crushed their ER estimates.
Hey guys,
Hey,
I got the stream up. I'm going to be doing some basic trend stuff on stream.
okay.
Yep.
Back switching.
What's
I'm
going on
trying
with
to see
Netflix?
that.
Did they guide already? Do we have guidance yet?
Yeah, they're supposed to be up on YouTube. It's not up on YouTube.
Yeah, there's
their
supposed to be
guidance.
3, but don't know.
Come on, SPX. You're supposed to open up at 2880 tomorrow.
Nope. Too bullish.
Too bullish.
That's what I'm afraid of. That is what I'm afraid of.
Too bullish. Where's the fear and greed index at?
Yeah.
So yeah, I got the stream up. Gonna start in about 20 minutes officially and do some light charting and light Fibonacci work. We'll be looking at AMD. We'll be looking at a couple of other tickers.
Awesome. AMD is gonna be so sexy tomorrow.
Oh, but by the way, did you notice something interesting on the AMD Daily today? Look at the squeeze.
The TTM squeeze or what?
Yeah, look at the TTM squeeze.
Oh, I'm not on my computer at the house. I'll have to check it when I get home. But I will definitely check it. I know it's squeezing after hours here on the Don Chion channels. Everything I'm seeing says 29 plus at open tomorrow. Not yet, buddy.
You know what's gonna make me believe like we're back into the bull trend? A gap up in the indexes.
That's what I was looking for here.
But you know the thing is that when the gap up happens, you want to be in it for that. You don't want to just be on the sidelines.
No, I don't care. I don't care, because if it gaps up, that's just barely the first gap up. That's that's my confirmation.
True.
Because us peons cannot bring that market gap. Retailers and real money is what brings up that gap.
Yeah, but take a look at ES today, right? That's not a bad gap, is it?
let's see here. It closed yesterday at 73. Oh, yes. I'm sorry. Let me look at yes. We closed yesterday at 28.1675, and we opened. I'm sorry, 28.1650. We opened today at 28.1550. I'm sorry, 28.1625. So we opened 0.25 under. So that's no gap.
Okay, Travis. Popped up, and that they're saying they have a 15% increase for Q4 guidance.
Where'd you get that from?
That's what Travis just said.
I don't know.
It's not showing it in the after hours. Because if they had a
I know that's
50% increase in,
I don't know if anybody actually really read this letter to investors. Let's see. We anticipate the FCF will be closer to -3 billion than to -4 billion for the full year of 2018. We expect our quarterly FCF deficit will increase sequentially from Q3 to Q4 as our year-to-date FCF is 1.7 billion. We currently see next year's negative FCS is roughly flat with the year. Free cash flow in Q3 is up from last year, so that's not good. Let's see. We plan to roll out previously announced partnership with Sky UK is coming in Q4. They're planning to expand their partnership with Verizon to pre-install Netflix app on all Android phones in Q4. They're extending their partnerships with TV providers, ISP, and mobile operators.
I mean, Netflix is over that middle Keltner now with this action, and it's actually over the top upper Keltner right now in the 4-hour with this action if we turn on after hours, I believe, right? So this is essentially a gap and go here on Netflix, right?
Mm-hmm.
Yeah, it just has to hold.
It just has a hold into tomorrow.
Guidance needs to be in line, or at least nothing negative. And
yeah, in order to change the trend up, all we needed was get to 355. And we change the trend. As part of one of the new indicators I'm using is the parabolic SAR indicator. You'll see it on the stream, the parabolic SAR indicator. So I'm using that indicator now, and to basically add that into your workspace, I recommend putting it on the daily. All you do is literally add parabolic SAR. It'll be right here. And you have parabolic SAR, right? So that is a new indicator we're going to start using, especially on the daily. It'll give you a general gist of bullish, bearish action, and it's kind of easy to read. For instance, here we have it on Netflix, right? And you can definitely see. What's up?
What's it say on Netflix?
Well, if you look at the parabolic SAR, essentially parabolic SAR tells you at a glance whether or not a equity can be bullish or bearish, right? It also gives you an idea of where the crossover will change, where the overall trend will become bullish or bearish. So you see these dots formed on parabolic SAR, right? And the general gist of it is when the dots are below the price action, it is a sign of bullishness until it reaches that price point where the parabolic SAR is.
Gotcha.
So in this case, with this move overnight, we have essentially changed the whole direction of Netflix to a bullish day.
I think we might be able to get a play up to $401 on Netflix for a gap and go. at least.
I'm looking at 400 as pivot, 410 as second pivot for a test of 420, which was major resistance.
Now, as part of the premium workspace, we have this really cool script built in called the Trendline script, and it creates these gold and like sometimes red or brown lines, and it gives you the historical trend lines essentially of where things were, right? So we can see that there is a trend line here that extends from way back, that a historical trend line that Netflix has bounced off of. And that historical trend line goes all the way back to December of last year, essentially. So what we can also do here is, just to give you guys a quick idea of the trend line here, we're going to draw some trend lines on here, and I'm actually going to get rid of, for a little bit, the historic trend line script. So now there is no trend line, we just have this linear regression channel here, which is basically the major point of resistance and support. Essentially, if from the very beginning Netflix followed the same trend, this would be the midpoint of the price action, essentially. So as you can see right now, it is way below the midpoint of the price action, of the historical price action, and we should be actually trading around 400 had we had kept the trend going from January, February. I'm actually gonna mute the. I'm gonna step away from the premium voice chat. You guys can hear me on the stream, right?
Mm-hmm.
Cool. So, essentially, what we have here is we got rid of the trend here on the daily chart here, and we're going to draw our own trend lines to give us an idea of where and what this trend was, and why we're going to be breaking over or not breaking over this trend. So the idea is that everyone, I always say this, everyone wonders where the trend is. How do you determine the trend? Figuring out the trend is as simple as drawing some lines. A lot of people think that trading is very difficult, and well, it is. But there's no reason to make it any more difficult than it really is. So what we're going to be doing is simply drawing some trend lines here and showing you how simple it can really be to trade just following basic trends. So here is the daily chart of the premium workspace that we have, right? And this chart here shows us our basic setup, the 6821 setup, our TTM squeeze, and our McClellan oscillator. And as you can see, our McClellan oscillator now is on its way up, showing us a lot of bullish action here, right? If you guys can see, let me just adjust here. So here is our McClellan oscillator script here, and it's on its way up here. And we also have the first day of a possible squeeze here based on how this is firing. We've had on the TTM squeeze a bunch of red candles here building up a possible squeeze situation, and then we have a yellow bar showing us that now there is price action moving up. And then we're going to draw some trend lines. So we're going to take the trend line tool, and we're going to simply draw from the bottom here, from say the bottom of this candle, and we want to bring that through all the different candles to continuously draw our trend line, right? So I'm going to bring this through here, right? And then we'll draw another trend line from this candle down with the similar trajectory, and that brings us there, right? And then we have this bounce on Netflix, right? So you can easily see the change of the trend based on just drawing a general trend line candle from the top of the bottom, right? So you can see from this bottom, we've never really hit that bottom trend. And as we create the new highs, you could have easily bought the bounce in this trend, right, as it was created. So after the first line was created, right, after this first trend line was created, from this candle to this candle, you could have theoretically bought every dip going through, going up. So for instance, we'll draw from this candle, we want to just go through there and so. So you could have easily bought this dip on every bounce down that hits this candle, right? And once it actually came back down through the candle with conviction, you have the chance to move down, right? But what does this actually mean, right? It's not enough when you just draw the downtrend, right? Because you actually have to draw the channel from the top as well. So here's the channel from the top, right? You have the top point here of Netflix on this trend, and we're going to bring it all the way down through this candle, right? And we drew a trend line here from the top to this candle. So we have this channel easily drawn out, and we see that once this channel was broken through, there was upside, right? So you have the top of the you have the bottom trend and the top trend drawn to give you an idea of where the bounce points are and where you're looking to break through for the next trend view. So that's like a really basic, very basic idea of drawing trend lines and drawing channels. And generally, this is like the most obvious trade that most people don't get into because they're all stuck in the cloud. They're all stuck in all these other super convoluted ways of trading when all you really need to do is stick to basics of trends, right? So based on this, we can see the trend growing there. So let's take a look at Amazon now. The trend here is really simple, right? It just goes one direction, right? If I were to draw a trend line from here, going all the way through, or from the bottom here, the low, going all the way through, right? Look at this trend, right? Now let's zoom in here. This is a major trend over the course of say 1 year, right? So let's zoom in. Let's make some more trend lines. Let's just draw some trends here. So using this basic idea of this trend here, right? You can say if we go over this line, we're oversold, right? So what happens here? We went over this line here for a little bit, and you could have bought puts to ride the wave down, correct? Just like if we draw the trend line here on the bottom, and just make sure we follow all the way through, we could see the bottom bounce, very simply, and then the move down once it broke through this trend. There was no real secret there, right? As long as you keep drawing the trend lines, you can actually see. Now, here's what worries me about Amazon now, right? We drew this trend line, this old trend line, this from a year ago, right? From this year-old bounce, and we have it here still sitting under. Now we have the setup that we use in our room called the setup. Basically, it's the ET up, right? And it's the 6-8-21. The green dot's a 6, 8 dot is the 8, and this gold dot is the 21. So the idea is that when the price action moves through the 6 and the 8 day and closes above the 8 day, it can move to the 21 day, right? That is the general trend that's the general idea of this trend play. So based on this, we're going to draw some new trend line from here, from the bottom point here, and we're just going to draw through these couple of days, right? And the idea is that as long as we do not break through this trend here, this should be in play. And the idea is that we should get there by, if we were just to follow this trend line, the bottom of this trend line will get to the 21 day, which is 1902 by 1024. So in a week from now, we should see Amazon at 1903, 1902, if this follows the trend that we just drew here. So this is like like I said, a very basic idea of what the trends are and how to draw these very basic trend lines. And the idea is like, I believe someone else has said this before. If someone had told me that all I needed to do to make money was know how to draw horizontal lines, believe me, I would have changed my profession. Okay, but that it's kind of as simple as that, right? So let's draw this other trend line here just to see if we've broken through. So we'll take the trend line from the top here, and we're going to see how this relates to us, right? So take a look, right? We've broken through this other trend that we have here. Now let's take from this bottom here. Now this is where interesting part is, right? You see this trend, this bottom trend? We broke through here, and we're now sitting at this bottom trend. So this turns out to be a pivot point, a very, very important price action point for us to follow and for us to understand. Because if this trend gets broken tomorrow, there is possibly more downside, and we can re-enter this downtrend. Okay. Now, understanding the relations between the different tickers, right? Because essentially, people were looking at Netflix as the start of the kickoff season for tech companies, right? And if I'm not mistaken, Netflix pretty much nailed it and beat, and Netflix is doing phenomenal now, right? I believe they went up a ton of points. How are they doing in the aftermarket right now? Are they still holding? Let's take a look. Yeah, Netflix is still holding. It's around 386 right now. So really, really nice move on Netflix, right? So the idea is that if tomorrow Netflix holds, there should be big money there. And the idea is that if Netflix holds, and this is the more important thing, it shows renewed strength and renewed fervor in the tech indices and the tech names like Amazon, like Microsoft, like Apple, because if Netflix does well, those names should continue to do well into into the next month, into the next quarter. Uh, so with Netflix coming up, the idea is that there's a very, very high likelihood of Amazon actually moving up as well. Now, my charts, you'll notice, don't have after hours on. I have separate charts just with after hours on, but these particular charts do not have after hours on. I will turn on after hours just for purpose of seeing where it is. But the idea is that I don't like to trade with after hours on because price action can and usually doesn't always hold in the after hours, right? So let's take a look at Netflix one more time. It's not even showing me after hours anyway. Go figure. I have to probably put it on the shorter time frame. So that is the idea there. So let's draw some more trend lines. Let's run this AMD. Here's the AMD trend. Let's take a look at this. Now this is what drives me crazy because that is the trend, right? But then you have this other trend here, which looks like this, which AMD just bounced off of. It literally bounced off the top trend of an old trend line. You see that, guys? So I always find this kind of interesting when you find charts like this. So let's draw another trend here, right? From this peak to there. So like to me, AMD is still like this crazy, unsustainable thing. But every single thing in the market right now is kind of setting up for a move to the upside, along with the McClellan oscillator, along with the squeezes on multiple time frames. Everything just seems to be kind of setting up for a move to the upside. And now that Netflix has beat its earnings, and assuming that the market does not sell off the Netflix earnings tomorrow, there is a high likelihood that the market should continue to move higher. And if the market continues to move higher, we should also see the VIX sell off, And short of Donnie Two Scoops doing some crazy tweeting, these should there should be relatively less volatility in the market, as the market should just continue to move higher and higher. So let's draw some more basic trend lines. Let's take a look at Microsoft, right? So here's the Microsoft chart. And Microsoft, see, I don't know if you noticed, but almost every chart is kind of looking the same. Every single chart created this butterfly pattern, and then now creating this ET move to the upside. So Microsoft looks like it has that move back to 112 and possibly back to 116, 115 should it want to go there. So let's take a look at the trends here on Microsoft. So I'll draw from the bottom here. So this is an older trend here, right? As you see, we kind of did the same thing that Amazon did, and everything's kind of falling through. And that's going to continue. So that's kind of falling through, right? So next step, right? We have this trend, and we can see the trend. So how far back does this trend really go? Because the idea is that we keep creating a new trend, right? Every time that we make new highs and lows. So the idea is you can also draw these little micro trends here. Now I know that Drago likes to draw these crazy wave patterns within these trends where you can see the up and down moves. And you can kind of see it. There's nothing wrong with the waves. Elliott wave I don't think really works, but waves and predicting price action kind of makes sense because that is kind of how price moves. So as you can see, like we have this move up, and you can see the trend moving up in that move. And then once it goes to the top of the channel, we have the move down. And then you can just quickly draw the trends back up and down. But I don't think that, for instance, this particular trend has hit the bottom yet, because we have to still break through here, right? And as long as we remain bullish, we have to break through the trends that are being created, right? So like I said, this is the idea of a basic trend line. You're simply drawing lines under the price action, trying to go through as much as you can, and then you can see where the breaks of the price action are and where the trends change from their basic ideas and forms, right? So you can see here where the trend can come up and down, right? Now take a look at this old trend line here, right? This is an old Microsoft trend line. Once we zoom out, you can kind of see where Microsoft is and was on the price action and where the movements are, right? So we can draw this trend line in multiple ways. We draw from the very, very bottom and try to strike through the very bottommost price action. One second. For some reason, I'm not getting the... let's clear. All right, so for some reason it's not letting me change the drawings all of a sudden. There we go. So let's say we take from this trend line here and we come up through the bottom there, or we come up through this trend line. You can kind of see where it's possible and where the very bottom could have been for Microsoft, right? Then when we add more trend lines, and simply add through here, you can see also where we become overbought, right? So this is an old trend line, right? And you can almost see like this is almost like the return to an old channel. And then we broke through this old channel to go back up higher into this other channel that was being created over time. So here's this other channel that was being created over time. and we're just drawing trend lines. And it looks like just a bunch of lines, but these give you the idea of where an equity can be going. Yep. I think I tried to draw that one out. Like for some reason, yeah, see there it is. Look at this trend line. Right? It's not perfect. Let me quickly, I'm trying to clear out all these drawings. So now I have a million trend lines dating back to, say, what is this? February. And you can see where the February bounce was and where the February trend is. You can see where all these different trends are, right? Now here's this trend, and we have a possible bottom at 102. Right, going from the bottom here of this trend. Now let's go back further. So this is from that trend going all the way through, and we have this trend from December as a possible bounce point as it hits this butt. And this is without the general wicks. This is using, instead of wicks as the trend line. Yeah, Billy, I see that as well. I'm getting a message from Billy because he's trying to do the same trend line that I am doing, and he's getting like this weird thing where he can see the actual bounce happen where the trend line meets. Do I have my after hours on? What is up with that? So I was trying to show that as well. So, like I said, this is the general idea of following a trend and trading the trend, because this will give you the idea of where you're overbought, where you're oversold, where you have, essentially no business buying and selling, and essentially where is a good time to buy and sell and where the possible bounces are. Let's open up one more. So using this in conjunction with the Fibonacci's, you can get a good idea of where the price action can go and where the trend is leading you. So let's take a look. Amazon we already did. Let's take a look at Baba. Since we were trading Baba today, right, we had a couple members make some money on Baba. We chased into Baba calls today when we saw the momentum coming into Baba, and we saw the move that was going to the 156 range based on our charts, right? However, I want to also point out that Baba hasn't even initiated a squeeze yet, right? We're still kind of making that TTM move up yet, and we haven't gotten there yet. TTM, the shorts are still coming in, and I think that's because the overall idea is that emerging markets is quote unquote dead. I don't believe it, but that is the current idea. So let's draw some Baba trends, right? So Baba is where we should get an interesting trend line, because the Baba trend lines will give us an idea of where the price action is going and where our major points of resistance are going to be. So first off, let's draw the bottom trend, right? So the bottom trend is going to be these bottoms here, and we're just going to try to make a straight line of where the bottoms are, okay? And you'll see that there's a bounce here at the bottoms, right? You see that there's a bounce. 1, 2, 3 bounces at the bottom until we finally broke, right? So we finally broke and actually made a head and shoulders pattern. We finally broke through, right? So let's now draw the trend lines. Very simple. We're going to take it from here, from a perceived bottom, and we're just going to draw the trend through it. And we're going to keep readjusting the trend as we go through it, right? So we have a trend there, and it readjusts. So now let's readjust the trends from there. So there's another trend, right? So now let's draw the top of this trend. So this is the top of this trend here. Now let's readjust and draw the trend within a trend, right? Because it never really went back to the top. And you'll notice that the trend kind of meets with the 21-day, right? So this is our essential channel here, and this is going to be acting as a possible resistance for the top of the channel. While you see the bounce here at the bottom of the channel, right? So theoretically, we have a move to the top of the channel at 152. And this is the previous trends that we have set up on BABA, right? So when you see this break of the trend on BABA, that's where things get really, really interesting, okay? Now, you're going to say, well, we keep readjusting the trend, we keep readjusting the trend. So let's draw a trend that goes through so we can actually see where there are breaks and it's been rejected, right? Because that way we can get a better sense of where things go. So let's draw from the perceived top, and I'm just going to draw through, right? I'm going to draw through this right here, this point right here, which is another quote-unquote perceived top, right, where there was a break, okay? And we're just going to go draw it all the way through, okay? And this is going to act as more of a trend, like a trend within a trend, right? So this is all the way through, and this is going to be acting as our main trend, right? And as you can see, that every time it's below, it kind of magnetizes above and below, right? So this is going to act as our main trend. And as you can see, the top here, every time it falls through, it acts as a major, major resistance till it bounces, and it acts as major, major support. So the top of the trend, we'll just draw through. So we have to break above this point in order for us to invalidate this trend, in order for us to move higher in the trend. And again, we're just going to break it, go through. We're not going to worry about where it actually already broke through. We're just going to make that one trend line, okay? And just to see where we are in our trend. So we are currently sitting in this one trend here, this one trend line that was created in July. So this is a trend that was created in July, and we're still sitting within it. And we have to break through. Billy, I'm actually thinking something up with the scale on Thinkorswim. Not sure. So that is the BABA chart, right? So that is what happens when we draw general, really, really basic trend lines, right? It'll give us an idea of where a stock can possibly go, where the points of interest are, where it should theoretically bounce and have resistance and support. We don't care. We don't give a shit about no clouds. We don't give a shit about magic, numbers. That is our general support and resistances. Psychological support and resistances are usually quarters, 50 cents, and dollar marks, depending on stock and sentiment. But these are the idea of our resistances and where things should theoretically go. Now, let's draw some Fibonacci here as part of our BABA trade. And by the way, if anyone didn't see, we entered BABA. We had 152.5 calls and we had 150 calls, both of which were up, I believe, a very, very nice portion and are continuing to go up due to NQ. However, I believe NQ is currently getting sold off here. Now this is part of our premium premium chart. As you can see, important points of resistances, important price points actions that are of note with the bird's eye view, so you can get an idea on the YM, on the VIX, on TLT, on the yen and the NASDAQ, so we get a strength. And you can see the TTM squeeze along with certain key indicators here that we use, such as the 34-day and the 34-day EMA and some other important price action points. Now, the reason why we use the 34-day EMA is because the 34-day EMA essentially it mimics important Fibonacci point resistances and supports. If I were to pull back, let me pull up another window here from our premium, right? So this is our another window in our premium section here, premium workspace. And what you will notice here is that this red squiggly line here that is in with the drawings, so what you'll notice here is that this red squiggly line here that is in with the drawings, that's the 34 EMA. And I'm willing to bet that every time this thing has the price action has moved to the 34 EMA, the price action has the 34 EMA and the price action has met at a Fibonacci point. It's just the way it is. It always happens. Also, guys, I want to point out something here on BABA seasonality. This is not the first time or the first year we've had a move down here before the seasonality of this ER season. As you can tell, there have been times before where we have rocketed on BABA. However, I'm not expecting a year like this year where we move from 100 to 200 over the course of 1 year. So with equal reaction, there has to be equal reaction, right? Ups have to go with downs, just the way it is. So yeah, so this is the price action here. I'm going to create a quick Fibonacci here on this price action so we can see where the 34 EMA reaches and meets the Fibonacci points here. So I'm going to open up this main BABA chart here where we drew some trend lines here. And to put it simply, I will just put some Fibonacci retracement points. Fun. All right. For some reason, I can't get these tools all the time to show up. Okay, Fibonacci retracement, there it goes. So I'll draw this from the top to the bottom here. And we're going to go back to the other chart. And let's take a look here at this. Let me get rid of these trend lines just to unclutter things. Now take a look at this price action, right? Fibonacci point right here meets within a 2 price point move here, and where it gets rejected at the 34 EMA. This is on August 23rd on BABA. And again, rejected at 34 EMA, which just happens to coincide with the 38.2 Fibonacci retracement. And then once again, gets rejected at the 34 EMA, which just happens to be right near the 0% retracement mark, right? And then past the 0% retracement mark, it just goes down, right? And it has to create new Fibonacci points. So kind of an easy trade there with BABA, as we're now the current trade with BABA is after this down move and after this rejection from the 34 EMA on the daily, and the Fibonacci points constantly retraced all the way back down to 0. Theoretically, BABA should have a snapback. You'll notice in the volume here, in the volume indicator, today there was no selling on BABA. There wasn't that much buying, but there was no selling on BABA. And that's kind of an important thing, because usually when BABA sells off, as you can see, BABA really sells off hard. But BABA really only sells off at key points of resistances. It doesn't really just sell off for any particular reason. It has to have a reason for sell-off. Now, now the whole thing is, I know a lot of guys in the chat room have made a lot of money. Some of you guys have really made new milestones on your portfolio. Some of you guys are up 30% a day, 50% a day. And I want you to understand something. These are crazy numbers, okay? Most hedge fund managers, most people have a real problem making 15% a year, okay? And you're looking at 30% gains a day on some positions, okay? Some positions are even more, okay? You have to understand this is really important, that you do not let these emotions get to you, okay? Just because you made all this money doesn't mean you should go out and trade a lot larger. That is a recipe for disaster. What you should be doing is still practicing the same thing that we've been preaching in the chat room for, well, since you got there. And that is position sizing. Understanding your limits as a trader, understanding what it is that you want to accomplish on your portfolio, and understanding the goals and the discipline required to get there. Okay. Now, I know some of you guys, since you made these big gains, your guys are thinking, holy shit, some of these calls are infallible. I'm ready to put 100% on the next pick. You guys should definitely not do that. That's not how you're going to make money. You're going to make money by doing the same exact thing that we've been doing, and that is simply putting, 1 to 4% position sizing. Some cases 8% position sizing. If you really feel frisky with it, if you're a nut job, you maybe even want to do a 20% position size. Never ever go full on 100% into the market, because you do not want that risk. You do not want to carry that kind of risk profile. It just is not worth it. Okay. So I just wanted to say that, because I do see that some of you guys are really banking, and you guys are doing really well with our information and our advice and with our charts. So I want to keep it that way. I don't want you guys to lose your money. So understand that now. Only way this works is if we continue to all make money, and if we all continue to make money, we can all continue to be very happy and continue to let this train keep going, right? So as I said, this has been essentially the guide on how to draw general trend lines, and to essentially draw the big support and resistances, and draw the channels in which you want to trade. I hope you got something from this this quick demonstration. I hope there was something of value here for you guys. I hope you learned something, and I hope to see you guys in the channel to continue with this thing we got going. Continue making money, continue to basically strive for some financial freedom in this crazy and rough world where inflation is going nuts and rates are rising, and Powell's going nuts, and Orange wants to raise some tariffs. So we just want to keep our money. We don't want to overextend ourselves. We never want to be crazy all in the market. We just want to continue to make good money and follow the trends, and continue our job charting and just taking the trades that are there in front of us. So hope this has helped, and have a good night, guys.